What is going on, crypto fam? Get ready, because the news cycle is absolutely on fire today, and we've got the hottest updates that you absolutely cannot afford to miss. The pace is relentless, the stakes are higher than ever, and if you blink, you might just miss the next massive move in the market. We're diving deep into the stories that are shaping the future, from massive corporate plays to groundbreaking technological shifts. You tuned into the right place for the unfiltered truth and the most electrifying insights. Let's get into it. First up, we're talking about massive moves in the Bitcoin market, with a major player making a bold statement about long-term positioning amidst all the volatility. This is a strategy that could redefine how we think about holding digital assets in the long run. What does this mean for your portfolio? We've got the breakdown. Then, we're shifting gears to look at how Ethereum's ETFs are not just keeping up, but actually outperforming Bitcoin. This isn't just a minor ripple. It could signal a fundamental change in how institutions are viewing and investing in the crypto space. Is this a structural shift? We're on it. Next, get ready for some jaw-dropping news out of Japan. A massive company is making a colossal commitment to Bitcoin, aiming to acquire a staggering percentage of the total supply. We're talking about a strategic play that could have ripple effects across the entire market. How are they planning to do it, and what does it mean for Bitcoin's future supply dynamics? And finally, we're hitting you with an update on a project that's staking a significant amount of Bitcoin to supercharge the future of Bitcoin's ecosystem. This is about building the infrastructure and incentivizing growth in a way we haven't seen before. What's the plan, and who's behind this ambitious move? Stick around to find out. Don't go anywhere, because you need to know this. Hit that like button, subscribe if you haven't already, and ring that notification bell so you never miss an update. The volatility play, navigating Bitcoin's short exposure. The cryptocurrency market, known for its inherent volatility, is once again at a crossroads, prompting a critical discussion about long-term positioning versus short-term trading strategies. As market participants grapple with fluctuating prices and evolving macroeconomic factors, understanding how to navigate potential short squeezes and leverage opportunities becomes paramount. This is particularly relevant for major players looking to establish significant long-term positions in Bitcoin, even amidst periods of heightened uncertainty. Recent analyses highlight the increasing short exposure in Bitcoin, a metric that typically indicates a growing number of traders betting on a price decrease. While this can signal potential for a short squeeze, a rapid price increase when short sellers are forced to buy back to cover their positions, it also presents a complex environment for those with a long-term investment horizon. The challenge lies in distinguishing between temporary market fluctuations and fundamental shifts that might necessitate a change in strategy. For instance, a surge in short interest could be a reaction to immediate market sentiment or regulatory news, but it could also precede a significant upward price movement if the underlying fundamentals remain strong. This situation calls for a nuanced approach. Investors are advised to look beyond the immediate price action and consider the broader adoption trends, technological developments, and macroeconomic indicators that influence Bitcoin's long-term value proposition. The strategy of accumulating Bitcoin during periods of high volatility or increased short interest, often referred to as buying the dip or contrarian investing, can be highly effective for those with a long-term outlook. However, it requires a robust understanding of risk management and a strong conviction in Bitcoin's future potential. The key is to build positions strategically, perhaps through dollar-cost averaging, and to have a clear exit strategy or rebalancing plan in place should market conditions change drastically. Furthermore, the increasing institutional interest in Bitcoin, evidenced by the growing number of Bitcoin-backed financial products and corporate treasuries holding Bitcoin, suggests a maturing market. These larger players often have longer investment horizons and are less susceptible to short-term market noise. Their continued accumulation, even during volatile periods, can provide a stabilizing effect and signal confidence in Bitcoin's long-term viability as a store of value or a medium of exchange. The current environment, therefore, presents a dual opportunity: for short-term traders to capitalize on volatility and for long-term investors to potentially accumulate assets at attractive prices. The critical factor for long-term success is maintaining a clear strategy, managing risk effectively, and staying informed about the evolving landscape of both the cryptocurrency and traditional financial markets. Audience impact. Discussions are rife across crypto forums and social media, with many users debating whether the increased short interest is a sign of impending doom or a golden opportunity to stack more sats. Analysts are divided, with some predicting a sharp correction and others anticipating a massive short squeeze. But is this the only major shift happening in the crypto investment world? What happens when other digital assets start to steal the spotlight from the king? Get ready, because the next story reveals a surprising trend in institutional investment that could be reshaping the entire landscape. Ethereum ETFs surge ahead, a paradigm shift in institutional capital. In a development that has sent ripples through the financial world, Ethereum exchange-traded funds, ETFs, are not only competing with their Bitcoin counterparts, but are now demonstrably outperforming them. This trend suggests a potential structural shift in how institutional investors are allocating capital within the digital asset space, moving beyond Bitcoin as the sole gateway to crypto investments and embracing other major cryptocurrencies. The performance disparity between Ethereum ETFs and Bitcoin ETFs is a significant indicator. While both types of products aim to provide investors with easier access to these digital assets, Ethereum's ETFs have recently shown stronger returns, capturing greater market interest and demonstrating a more robust growth trajectory. This outperformance can be attributed to several factors. Ethereum's ecosystem is vast and rapidly evolving, encompassing decentralized finance, DeFi, non-fungible tokens, NFTs, and a burgeoning Web3 infrastructure. As these sectors mature and gain wider adoption, the utility and perceived value of Ether, ETH, as the native currency of this expansive network increase, making it an attractive proposition for institutional investors seeking diversified exposure to the crypto economy. Furthermore, the anticipation and eventual approval of Ethereum ETFs in key markets, mirroring the earlier success of Bitcoin ETFs, have provided a regulated and familiar avenue for traditional finance players to enter the market. This regulatory clarity, combined with Ethereum's fundamental strengths as a programmable blockchain, has likely fueled institutional demand. Investors are increasingly recognizing Ethereum's potential not just as a digital asset, but as a foundational technology for a new generation of financial applications and digital ownership. The narrative is shifting from Bitcoin as the primary digital gold to Ethereum as the digital oil or the backbone of the decentralized internet. This perception is reinforced by ongoing upgrades to the Ethereum network, such as the transition to proof-of-stake, PoS, and future scaling solutions aimed at improving transaction speeds and reducing costs. These advancements signal a commitment to innovation and long-term sustainability, which are crucial for attracting and retaining institutional capital. The outperformance of Ethereum ETFs could also indicate a broader trend of institutional investors seeking higher growth potential and diversification beyond Bitcoin. While Bitcoin is often viewed as a store of value, Ethereum is increasingly seen as a platform with immense utility and a more dynamic growth outlook, driven by its active developer community and diverse use cases. This could lead to a reevaluation of asset allocation within digital assets, with a greater proportion of institutional funds flowing into ETH-based products. Audience impact. The market reaction has been palpable, with analysts debating whether this signifies a permanent flippening in institutional preference or a temporary phase. Retail investors are keenly watching, with many seeing this as validation for Ethereum's broader utility and potential. While the spotlight shines on Ethereum's growing institutional appeal, a different kind of massive accumulation is happening on the Bitcoin front, driven by a bold vision from across the globe. Prepare yourselves, because the next story is about a Japanese giant making an audacious move to corner a significant portion of Bitcoin's supply. Japan's Bitcoin giant, Metaplanet's ambitious 1% BTC acquisition goal. in a move that underscores the increasing integration of cryptocurrencies into traditional corporate finance. Japan's Metaplanet Inc. has announced a monumental fundraising effort, aiming to secure $1.2 billion in overseas share issuance. This capital infusion is strategically earmarked, with a staggering $835 million designated for direct Bitcoin purchases and an additional $440 million allocated to expand its innovative Bitcoin income-generating strategies. This bold initiative positions Metaplanet as a significant corporate accumulator of Bitcoin, setting an ambitious target to hold 1% of the total Bitcoin supply by 2027. Metaplanet's aggressive accumulation strategy is multifaceted, aiming to hedge against inflation and the persistent weakness of the Japanese yen, while simultaneously enhancing its corporate value. The company currently holds 18,991 BTC, valued at approximately $2.1 billion, a substantial treasury that already marks it as a major player. The planned acquisition of more Bitcoin will bolster this position considerably. The expansion of its Bitcoin income business is particularly noteworthy, focusing on generating yield through covered call options on its Bitcoin holdings. This strategy has already proven profitable and is set to be scaled up significantly with the new capital, demonstrating a sophisticated approach to leveraging digital assets for revenue generation. The company's long-term vision is encapsulated in its 21 million plan and 555 million plan, with the ultimate goal of accumulating over 210,000 BTC by 2027. This target represents more than 1% of Bitcoin's total capped supply of 21 million coins, a level of corporate commitment that could have substantial implications for market dynamics and Bitcoin's scarcity narrative. The funding mechanism involves issuing up to 555 million new shares, potentially increasing its total outstanding shares from 722 million to approximately 1.27 billion. The precise issue price will be determined in early September, with settlements to follow. This significant fundraising is being conducted through overseas placements, targeting institutional investors, and is not registered under the U.S. Securities Act of 1933, indicating a strategic move to tap international capital markets without the constraints of U.S. public offerings. Metaplanet CEO Simon Jurovich confirmed the international offering, highlighting the legal nuances involved. Adding to its growing prominence, Metaplanet has achieved a significant milestone by being upgraded from a small cap to a mid-cap stock in FTSE Russell's upcoming September 2025 semi-annual review. This reclassification will lead to its inclusion in the prestigious FTSE Japan Index, a benchmark for many of Japan's largest publicly traded companies. Consequently, Metaplanet will also be integrated into the FTSE All-World Index, joining a select group of global corporations. The company's strategic financing shift, moving from stock acquisition rights to diversified strategies including preferred shares, reflects an adaptation to changing market conditions and a more robust approach to capital raising. Facilitated by major financial institutions like Morgan Stanley and Co. International plc and Cantor Fitzgerald and Co. as bookrunners, the offering signals strong institutional backing and confidence in Metaplanet's Bitcoin-centric strategy. Audience impact. This news has generated considerable excitement, with many seeing Metaplanet's aggressive Bitcoin acquisition as a strong endorsement of the asset's long-term potential and a significant development in corporate crypto adoption. But while massive corporations are making bold plays with Bitcoin, a different kind of innovation is brewing at the Layer 2 level, aiming to build the future infrastructure for the Bitcoin ecosystem itself. Get ready for the final story. A project is staking significant Bitcoin to fuel the growth of its network. Goat Network bets big on Bitcoin, 34 BTC to seed Layer 2 ecosystem growth. In a pioneering move that could set a new precedent for Bitcoin Layer 2 development, Goat Network has committed a substantial 34 BTC to its newly established pilot fund. This allocation marks the first time a Bitcoin-native zero-knowledge, ZK rollup project has dedicated its own Bitcoin treasury to incentivize ecosystem growth, distribute rewards, and foster community engagement. This initiative is designed to build a robust, Bitcoin-centric infrastructure that prioritizes sustainable development over short-term gains. The pilot fund, accumulated over the past year, has already begun deploying capital, with over 2 BTC distributed to users and liquidity pools. A key highlight is the partnership with Artemis Finance, a protocol built on the GOAT network. Artemis Finance is currently offering an impressive annual percentage rate, APR, of over 7% in BTC yield, with a combined total APR of 87% when factoring in additional incentives. This dual reward mechanism allows users to stake Bitcoin, earn yield, and simultaneously accrue points eligible for future airdrops, directly aligning rewards with the value of native Bitcoin rather than inflationary tokens. This strategy is a significant departure from typical blockchain ecosystems that often rely on issuing new, potentially inflationary tokens to bootstrap liquidity and reward participants. By using actual BTC, GOAT Network not only ensures that incentives are tied directly to the value of Bitcoin, but also promotes a more sustainable and principled approach to ecosystem development, resonating with the core ethos of the Bitcoin community. The pilot fund represents the initial phase of GOAT Network's broader treasury strategy, which plans for a larger ecosystem development fund in Q4 2025. This future fund will offer grants, milestone-based funding, and long-term builder incentives, further solidifying its commitment to infrastructure development. GOAT Network has also showcased impressive adoption metrics, recording 51,000 daily transactions, positioning it as a leading Bitcoin Layer 2 solution. This growth is supported by ongoing liquidity programs, community engagement, and recent technical advancements, including the BitVM2 beta testnet, which enables sub-3-second real-time proving across multiple provers. These enhancements are crucial for scalability and efficiency, making the network more attractive to developers and users. The deployment of a Bitcoin-backed treasury is seen as a strategic masterstroke, aligning incentives with the network's core asset. Avalon Finance, an ecosystem partner, has lauded the approach, calling it a new standard for Bitcoin-based networks supporting builders and communities while adhering to Bitcoin's principles. Kevin Liu, a core contributor to GOAT Network, described the treasury commitment as a war chest for ecosystem expansion, emphasizing the long-term vision of building foundational infrastructure. Looking ahead, GOAT Network aims to accelerate its growth through expanded partnerships, the development of new Bitcoin-native yield products, and the full integration of BitVM-based security features. With the pilot fund now operational, the network is solidifying its position as a key innovator in the evolving Bitcoin Layer 2 landscape, leveraging the intrinsic value of Bitcoin to drive sustainable growth and developer adoption. Audience impact. This innovative use of Bitcoin as an ecosystem fuel has been met with strong approval from developers and the broader Bitcoin community, who view it as a principled and sustainable approach to scaling. And that's a wrap on today's biggest stories. But before you go, let's quickly recap the absolute must-knows from this packed episode. All right, everyone, that's all the groundbreaking news we have for you today. We saw Bitcoin's short exposure debated, Ethereum ETFs outperforming Bitcoin, Japan's Metaplanet aiming for 1% of all BTC, and GOAT Network staking 34 BTC to build the future. Don't miss out on any of these game-changing developments. If you found this information valuable, do us a massive favor. Smash that like button, subscribe to the channel if you haven't already, and ring that notification bell so you're always the first to know. And hey, let us know your thoughts on these stories in the comments below. You can also follow us on all our social media channels for more real-time updates. Thanks for tuning in, and we'll see you in the next one.